think he's talking with someone at home there.
Oh, okay, okay, okay. Yeah, I didn't hear anything.
What's going on, everybody? How y'all doing? I'm over here sweating. I'm over here sweating like a Hebrew slave. I was about to get on live, and then me and my sweetie started talking about a couple things. So got caught up on that, and now I'm here. Let me see. Are we live? Let me see. Oh yeah, we live. We live. Check the sound over here. Check out the sound. Check out the sound. Check, 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 check. Check, 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 check. Yes, we are live. We are cooking with Crisco. Did I send out, let me send out the bat signal. And then we'll get to it, man. Let me send out the bat signal. And we're going to get to it. Bat signal is out. How y'all doing today, man? How y'all doing today? Let me go over here. Put this over there. All right. Go over here. Entry date. Put this over there.
What's up? The Asian people might feel some type of way about that.
Hey, man. I'm used to it. I'm used to being the bad guy. I'm used to being the bad guy.
You need people like me.
You need people like me. Say goodnight to the bad guy. All right. Okay. I think we got everything together. What's up, Jokur? Shout out Jokur, Beard Gang in the building. Hey, man. Let's go. Oh, I ain't put on my other, what's the name? Don't nobody be on IG no more. People used to be on IG, and then when I left IG to come to YouTube, now when I go live on IG, it be dead zone. Me done know what happened to the following. It be dead. The boy for dead. Boop. Put this here. All right. Now we got that there. In case anybody want to pull up. Chat. When my son be looking at videos, the streamers he be looking at, they be like, chat. They been. I mean, we saw a video from years ago. Y'all know how I just get all off topic. I don't care. Right? I was looking at some old videos from like years ago when Timothy was like, he was a little huckabuck. I don't know how old he was, but he was real young. And he came in the room and we was talking. I was like on live. I was on live stream, and then he was like, chat. And he was like, why did I just say chat to your chat? Like, he was like, chat. And I don't know why they be saying chat all the time. Chat, you know, chat. Hey, chat. They be saying chat a million times. But good evening. If this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. And I want to give you a nice hearty, but thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. It's just Big Spider if you don't hablo español. And, say what?
I said Big Spider.
You say Big Spider?
Yeah.
Oh. And you now in tune to another episode of the Intraday Price Action Recap. You hear me? Today probably gonna be an intra-week price action recap cause it's Friday. It's Friday. How was y'all week, man? How was y'all week? Did y'all enjoy this Don't Force It Friday? Oh, I forgot to shout out everybody. Let's shout out everybody that's in here. We got Jim up in here. We got Lump up in here. What's going on? We got Kim up in here. We got Here to Learn and Share up in here. Kim made it in the first spot today. Here to Learn and Share was slacking. Here to Learn and Share was slipping. We got Joker Trades up in here. What's going on, Joker? We got, it's kind of slim pickings tonight. I only see a couple numbers in there. Where everybody at? Everybody out there
It's
talking.
Friday, man.
Just
Everybody
got paid. Friday night. That's it. Just got paid Friday night. But hey, let's get to it, man. Let's get to it. This episode of the Intraday Price Action is being brought to you by Conquer the Asian Session. All right, Conquer the Asian Session. Tim, what is Conquer the Asian Session? Well, Conquer the Asian Session is a 2-week workshop / program, whatever you want to call it, right? It's a 2-week session via video conference where we're going to be discussing how to utilize the ICT concepts to conquer the Asian session, right? It's going to be held during the month of, when did I say it's going to be held? What did I say, gang? May 12th through, when did I say it was going to be held, gang? Y'all know I don't be, let me see, I posted it here. May 12th through May 23rd. And we're going to meet every night and tape read the Asian session from 8 to 9:30. And we're not just going to tape read, we're going to take a deep dive into some of the ICT concepts, and we're going to lay out 2 to 3, at least 2, but I'm thinking more like 3 strategies to utilize during the Asian session. And then during those 2 weeks, we're going to meet every night at from 8 to 9:30 to tape read and answer questions pertaining to the deep dive into the concepts that we have and the strategies that we cover. And what I'm going to do, I'm going to pre-record some prerequisites material for you to look at prior to it starting. And then once we get started, you have the prereqs out of the way, and we can just get right into the meat and potatoes of, getting into the tape reading and seeing if Price offers those setups. But we're mostly going to be focusing on how to come up with the narrative, how to come up with where Price should draw to, looking at the signatures that Price is giving you and understanding, is this a time to take setup A? Is this a time to take setup B? Is this time to take setup C? Is this time just to sit on your hands? We're conquering the Asian session. But Tim, how much does it cost? You can get it for the low price of $100. Now, I'm going to drop it. I'm going to drop the WAP link on the 1st of April. Right? Dropping the WAP link on the 1st of April. The slots are going to be limited. All right. Have fun.
All right, thank you. Chris outside waiting on me, so.
Yeah, he said he wanted to stop by what's the name and try to get David something for PlayStation. He not going?
Yeah, but I was waiting on him.
Oh. Oh, yeah, you should have known. Hey, when it's time for them to do something, they're going to be gone. They're going to be outside.
All right.
And you say y'all hanging out later?
Yes.
All right.
All right. Love you.
Love you too. So, yeah, I'm dropping it for the gang first. I'm dropping the WAP link to the gang first on April 1st, right? And then to give them first opportunity to take advantage of it if they want to. It's $100. Take advantage of it if they want to, and then after I drop it for them, then the following week I'll start putting it in the public. I'll put the public link out for them, for the public, right? For the public. Anybody that's not in the gang, you will have limited access to the Discord for those 2 weeks. And you won't have access to everything in the Discord. You'll just have access to the channel for the conquering the Asian session, in case I want to, put out some stuff in between. Y'all know how I do. Like, sometimes something comes to my mind and I want to say something, or I want to do something, or like it might be like on a Saturday when the market ain't open and something just pop into my mind, and I'd be like, hey, y'all pull up real quick. So it's gonna be like a Asian session voice channel. It'll be an Asian session channel that you'll have access to during those 2 weeks, and then after that, get out of here. You're back out of there. All right. Yeah, that's it. Conquering the Asian session. My brother said somebody might get offended by this picture, but I'm used to being the bad guy. So guess what? You know what I'm saying? That's Aranya Grande, the karate samurai. You feel me? Right? We got Aranya Grande, the hold on, he ain't on that picture. Let me find the other picture. He the boot camp soldier, right? We got Aranya Grande, the boot camp, the most disciplined soldier out there. You know what I'm saying? And then he went to learn some karate, and now he's a karate master with the samurai hat on. You hear me? Kim, don't be retracting those statements. Say it with your chest. What did you retract, Kim? What statement did you retract? Say it with your chest. Don't be retracting no statements. So, oh yeah, I put I don't care about no typos. It's 2025. We all speak typo. I put everybody that's in the gang. I put a poll inside the polls channel. Right here. I put a poll in the polls channel. I see we got 16 votes already. You got 43 hours left to vote on the poll. Right? Go in and take your pick. Right? I said, if I conduct this workshop, will you participate? These are the dates and this is the cost. Right? Go in and vote for me. Go in and vote. Let me know. Right? Because if I ain't got enough interest in house, you know what I'm saying? And then and I ain't about trying to do no super whole lot of promoting outside of the house. Outside of the house. Y'all know I ain't got time for that. And then by the time I start talking about stuff, it be so deep in my videos, don't nobody never know about it. So y'all let me know. Let me know if there's a need for it. If there's a need for the speed. What's going on, Corinne? Welcome, welcome, welcome. Let's put it on 15-minute candles. 15. Oh, look where we closed at today. We closed all the way back up there. Let's look and see what the daily candle looks like. Boop. Hit that slide. Oh, we came out with a green daily candle with a really long wick. That boy green candle got a really long wick. Oh my goodness. That boy is the most popular dude on campus. He got a really long wick. Today, from peak to trough, was 375.25 points. Right? 375.25 points. That's not a whole lot of range for the NQ, to be perfectly honest. Right? Tim, how do you know that without looking? This little indicator that Jim put me on to, I think that was Jim. Jim, you in here? Is Jim in here? Jim, yes it is. Jim, was that you that told me about this indicator?
I think so. Someone else asked about it too.
Yeah, Jim put me on to this right here. And so it's called the Power of 3 something. Let me see. For anybody who interested in what it is, it's called Higher Time Frame Power of 3. That's the name of it. So let's see. Higher Time Frame Power of 3 by 2 degrees. Right? Higher Time Frame Power of 3 by 2 degrees. Right? And the way I just keep it simple. When I set it up, I have it. Oh, I hit the wrong thing. I click it. I keep it set for the time frame I want this candle to show is the daily time frame. You can drop this down and you can see, like you can put it on a week. Right? That's what our weekly candle looks like. It's got a long wick on the top, long wick on the bottom. Right? And we, got a little green body right there in the middle. Right? And 565.5 points from peak to trough throughout the week. Right? But I just keep mine on day. Right? But you can keep it on whatever higher time frame you want to see. Right? You put it on whatever higher time. Like if you're trading on the 1 minute, right? And you want to see what the 4-hour candle doing, you can leave it on 4 hour. Right? I just keep mine on day. And yeah, that's it. I keep mine on day. And so I can see while no matter what chart I'm looking at throughout the day, I can see what the daily candle looks like. I don't always have it on. Like last night was the first time I turned it on like in a couple months. Right? When I first found out about it, I used to use it all the time, be like, oh, that's pretty cool. But then I started to realize that I was rarely even looking at it because most of the time it'll be out of the screen like this. It'll be over there and I have it stretched out and I don't even see the candle. It would be like out of the screen over there. So I was like, So we eked out a green candle today. Right? We eked out a green candle on the day. Let's utilize this and let's put it on a weekly because we're gonna talk about the whole week. 1 week. Right? And you see here, right? This is what let's do this right here. Get out of the way, daily high and low. Right? Get out of the way, daily high and low. Where's my... Oh, there it is down there. Get out the way, daily high and low. Get out the way there. All right. Don't need that prior day low right there no more. Get out of here. We fun to look at the whole week. All right. So this is the start of the week over there. Okay. We'll just do it like this. All right. Everything to the right of that line, everything to the right of that line is where this week started. All right, so everything to the right of that line is where this week started. Okay, and so looking at, let's do our other new day opening gaps too. So we got God dog, I keep opening the wrong thing. Okay, we got Monday, Tuesday, Wednesday, Thursday, and then Friday. All right. Okay, now, so looking at, this is the weekly candle. Okay. Looking at the weekly candle, if you just look at this weekly candle from experience of looking at the week, can y'all see the wicks on that? Let me see. Can I make the wicks bigger? Let me see if I can make that ain't doing nothing. No, that's something else. Body. Okay. I can't make it thicker. I could change the color, but I can't make it thicker. I was trying to see if wait a minute, style. Nope. Yeah, I can change the color, but I can't. I was trying to see if I can make the lines thicker. But y'all can, I think y'all can see it. Yeah, y'all can see it. So no harm, no foul. All right. So I just made them. I made all the lines black just in case. So from experience of looking at a candle like this, when we got a really high, when we got a really long wick on the top, and we got a really long wick in the bottom, right? And the body is like right there in the middle, right? This is the kind of price action you anticipate, right? And what did we do for the most part? All right, we went up, we went down, right? We went up, we went down, but what did we do? We just kind of hung out, right? In the middle right there. We just kind of hung out. And this right here, this purple line in the middle, who knows what that purple line in the middle is? Let me hide this, Let me hide this for a second. Don't need that up there. I don't know why I left it up there. Hide. Get out of there. Right. Who know what that purple line in the middle is? Any takers? Anybody want to guess what that purple line in the middle is right here? All right. Remember I said everything to the right of this line is where this weekly is. This week's
Don't you got
count.
a label for the new week open gap?
Yeah, it's new week opening gap. Right? No, not a point of control. I don't even know what that is. I don't know what a point of control. Shout out here to Learn and Share. Shout out Lump for pulling up with the hard-hitting answers. Right. That's our new week opening gap. Right? Joker, tell me what a point of control is. I don't even know what that is. What is a point of control? I've heard that term before. Like people who use like the volume chart on the side, like the people on Top Step TV. They be talking about this is the point of control. That's the point. I don't know what they be talking about. They have like a volume indicator on the side. They be like, this is the point of control, right? So, what's up, Lil Hawk? Shout out Lil Hawk in the building. It's the level where price trades the most. Volume profile, point of control. Okay. Okay. Gotcha. All right, so right here, this is the new week opening gap, right? Right there, right? And if we eyeball this from the highest
Would that
high
be like equilibrium too?
to the lowest low, that's what I'll just look at Jim. Look at Jim pulling up, trying to read my mind, right? Right. So we see over here, this is what our weekly candle look like, right? So from our lowest low, which seems to be this candle here, to our high, let me move this down so cause that stuff up there getting on my nerve, right? To our highest high up here, which seems to be that candle, right? Let's put lines on it. Boop. Let's make this, let's thicken this up. make it green, top green, boop. And then we're gonna come down here, right? This over here appears to be the lowest low right there, right? Make him red, right? So if we eyeball, right, from the highest high to the lowest low, right, this new week opening gap is very close to equilibrium, right? It's very close to equilibrium, right? So we're gonna go over here, stretch that down, put that there. Look at this. Look at this. Will somebody come look at this? Will somebody come look at this? Right? I was just saying eyeballing it is very close to it, right? And then we see over here, this is where we open on the week, right? Because this is a red candle, right? And we know we open at the top of the body. So this is where we open on the week. So on the week, we opened at 19,885 and a half, right? And equilibrium is 19,085 even, right? 19,085 even. That is not a mistake. That's not a mistake, right? Because what I was going to say is, right, when you're used to looking at a candle like this with a long wick on the bottom and a long wick on the top, right? Roughly the same size. They're roughly the same size, right? Ain't got to be exact science, okay? With like a little body there in roughly in the middle, right? You expect to see the intraday price look like this. And what do I mean when I say it look like this? We're just doing what? And during this whole week is just a big what? We have been saying we have been doing it for a while. I mean, we have been doing it when we was on a daily time frame. We never got down into the intraday charts like ever since like what was like Friday, Monday, Tuesday, Wednesday, Thursday. Now today, consolidation. Shout out Kim pulling up with the hard hit announcement. Y'all hurting my feelings now. Y'all ain't answering, right? So we just got a big area of consolidation, right? But when you want to train your eye, right? This right here is a nice little tool to use to try to train your eye to stay in touch with the higher time frame, what the higher time frame is doing when you're looking at the intraday charts, so that you don't get lost in the sauce. This morning when we was on the tape reading, right? One of the gang, you know what I'm saying? They slipped into that old habit that we all have of trying to build a narrative from the bottom up, right? You want to sit on the 1 minute time frame and start trying to build your narrative. Oh, we got a sweep of liquidity. Oh, we got a break in market structure. Oh, we should start. No, you don't build your narrative from the bottom up, right? You build a narrative at the top and then you come down for the detail, right? You don't abandon that higher time frame narrative until it's invalidated on the lower time detail. If it's not invalidated, you stick with that higher time frame narrative. Okay? So, coming into this week, right? Coming into this week, what do we say we had done coming into this week? Right? Remember last week, we said that we had come down to a monthly anticipatory reactionary point, right? We treated that low as a protected low. Oh, right over here. We said when we was right here, we said we treated that as a protected low, right? We was down here at our monthly anticipatory reactionary point on the older contract. There was a monthly order block that we had touched along with the monthly fair value gap, right? But on the new contract, right, we didn't touch the order block, right? The order block is a little lower. Y'all hold on. Somebody ringing my doorbell. Who that? Who that? Who that? Who that said that lies? Who that? Timothy Rogers. That's me. why there ain't no return address on here. Oh, that's Mama book. I was about to get nervous. That's Mama book. I was fun to get. I'm like, wait a minute, I ain't ordered nothing. Make sure I don't dox myself. My mom asked me to order a book for her. I was about to get nervous. I'm like, I don't remember ordering that. But I was at my mama's house the other day. And she said she needed a book for a Bible study class that she in. Who else mama go to church 72 days a week? Who else mama go to church 72 days a week? My mama got latest Bible class on this day. She got Tuesday morning Bible class, Wednesday night Bible class on Thursday, Bible class latest day on Saturday. This book right here. Right? That book right there. That's what it was. Bible charts and maps and timelines. Right? They fun to do another Bible class on something. All right. Gotta let her know her book here. Gotta take it over there to her. All right. What was I saying? Who in here? Somebody tell me what I was saying. What was I talking about? Oh, I remember. Right? When we was over here, we treated this as a protected low. Okay? So since we treated that as a protected low, right, we was anticipating trading back up. We was anticipating this right here becoming a breaker. Right? We talked about that. Anticipating this right over here becoming a breaker. That was our high, our low. And we was anticipating this to become a breaker. So we looked for a trade up in here, coming back up to that level there. Right? And then once it became a breaker, right, we see price came down, traded up, traded back into it, and we went up and we took out the buy side. Okay, now that we've taken out the buy side, right, now we're sitting to see what price wants to do. Why? Because we had traded up into a daily bearish fair value gap. Right, we had traded up into a daily bearish fair value gap here. Right, had a daily bearish fair value gap. And like on the old contract, we had a bullish and a bearish. We was in between the tail of two cities. That's what we was talking about. We're in between the tail of two cities, had a bullish and a bearish fair value gap. So we said we're not trying to force anything, right? On the weekly time frame, okay? On the weekly time frame, because we was treating this as a protected low, we want to see price get above this daily fair value gap and use it as support, right? Why do we want that? Because there is a weekly bearish fair value gap up here, right? That we anticipate price drawing up into. Okay, we got a higher time frame, premium PDub rate above price. We've shown a desire to not want to go lower, so we're anticipating price to draw up into this because the monthly time frame was in a buy program showing bullish order flow, and we had traded down into a monthly fair value gap. I only got it showing on the monthly right now, so let me show this on the daily. Right there. Oh, that's the monthly order block. I'm sorry. I need the monthly fair value gap. Right. God, dog, I did it again. Minutes. Right there. Okay. Monthly fair value gap right there. There's the monthly fair value gap. Okay. We traded down into that monthly fair value gap. Right. So we came down into a monthly anticipatory reactionary point. Right. And then we had a breaking market structure, showed that we was not wanting to trade below that low. So we're anticipating price trading up into this weekly fair value gap. And going into that weekly fair value gap, we want to see price get above this daily fair value gap on a daily basis, and then use it as support to trade up into the weekly fair value gap, right? So we have fiddle-faddled around with this daily fair value gap, both of these, for an entire week, right? So coming into this week, right, we said we're in between the tail of two cities, and we're not trying to force anything until we get outside of this area right here, right? Until we get outside of this area. Now, shout out the gang. I think it was Jim who was tape reading today. He was like, Tim, where did you get this fair value gap from? I don't have that. That's because this fair value gap was what I was watching from the other contract, and I just left it there for context of what we was in between the tail of two cities, right? And then the question was raised, well, if that is no longer there, right, what do you use if we're on the new contract, and when we look back that far on this time range, there's nothing to see, right? And as you look over there, the price action is very spotty, right? So what you do, you use whatever's in current price action, okay? So whatever's in current price action, let's hide this monthly, because the monthly time frame, we do have something over there to see, and let's hide this daily, right? So what do we have in current price action, right? We have a new week opening gap right there. If you don't know about a new week opening gap, right, if you turn the settlement price off, you still have a small volume imbalance right there. There's a very small volume imbalance there, right? Or if you leave the settlement on, same thing. You can just say, hey, there's a volume imbalance there. If you don't know, hey, that's a new week opening gap, right? Just a volume imbalance. And then you have some people who just call that a gap. Some people who don't know the ICT concepts, they just call that a gap, right? Because there's a difference between the closing price and the opening price. They just call it a gap, right? So whatever you call that, there it is right there. You have that PD array right there for the daily. And other than that, on the daily, right, you have a order block here. You got a daily order block right there. You want to focus on mean threshold, right? Mean threshold of the daily order block. So here are like 2, 1, 2, and then the low, right? There's your two current price daily PD arrays that you can watch based off of this contract, right? Because there's no daily fair value gap down here, right? And then if you notice what price has done this whole week, right? What have we done this whole week? We've been respecting that order block and that new week opening gap all week, right? Because here we go on Monday, we traded down into the order block. Tuesday, we traded down into the order block and the new week opening gap. Wednesday, we traded down to the new week opening gap right there at consequent encroachment. Thursday, we had an inside day, right? Monday, we took out a high. Tuesday, we took out a low. Wednesday, we took out, Monday, we took out a high. Tuesday, we took out a low. Wednesday, we took out a high. Thursday, we had an inside day. And then Friday, we came down and swept out all the lows, right? From Tuesday, Wednesday, and Thursday, right? Came down, swept out all the lows, then went back up and closed here. But every day, right, we respected the current daily PD arrays. The same way we was respecting that old daily fair value gap. Now prices create a new structure, right? Remember what I said, allow price to create structure. Prices create a new structure. What did we say? When we came down here, when we got into this area there, what did we say? We've created a low, right? We've created a high, okay? We came down, we left the low, we pushed up, we took out the high, right? We came back down to the order block, right? We pushed up, we left the high, created relative equal highs. We had an inside day, right? Now we've come down and swept internal sell side, right? Swept internal sell side, moved back up. All of these little signatures are bullish signatures, right? All of these are bullish signatures. Does that mean we're going to rip up? No. But people say, Tim, how do you see it in real time? Just like this. Looking at all the little signatures, because we got a bullish narrative on the higher time frame of the monthly, right? We got the weekly time frame is showing support at the discount PD arrays, right? But Tim, we traded all the way down here. Yes, we're going to have this liquidity run and this breaking structure because the monthly had a reason to come down here. We had a reason to come down here. The monthly, remember we talked about this already, right? Uh-oh. Wrong one. Right there. Boom. The monthly bullish fair value gap, right? It had a reason to come down here. We had a monthly bullish fair value gap we traded down to, right? That was right at mean threshold of this weekly bullish order block, right? We hit that and we trade back up, closing, respecting consequent encroachment of, get out of there. Consequent encroachment of this weekly fair value gap, right? We came down again, touched the weekly, make it big so y'all can see it, right? Came down, touched the weekly order block, right? When did we do that? Today, when we came down and swept all our liquidity. Remember on Friday, we came down and we swept Tuesday, Wednesday, and Thursday liquidity. Came down, dipped into that monthly, the weekly order block, right? Came back up and closed where? Respecting consequent encroachment of this weekly bullish fair value gap. So the weekly is showing bullish signatures, right? Does that mean we're just going to rip to the moon? No, but this is how you see it in real time. What are the signatures that price is giving you on the lower time frames? When the month, we already know what we expect the monthly to do, right? We got what we expect the monthly to do. We, just like we said before, we were anticipating the monthly to pull back, right? The monthly started to pull back. We watched to see if we got a reaction here, right? At these price points there, right? We got a slight reaction. Wasn't trying to call the bottom, right? Waiting to see if price wanted to reach deeper. Price wanted to reach deeper. So now this is the discount PD arrays that the monthly could pull to. It has pulled down to it now, and it's reacting off of it. So the monthly has given us a retracement like we anticipated. It has come to a discount PD array. So now on the lower time frames, now the lower time frame is showing that it's respecting the discount PD arrays and showing bullish signatures of respecting these discount PD arrays on the weekly. On the daily time frame, right? We talked about the daily time frame, how it's showing the bullish signatures. We came down, okay? We created a low. We created a high, right? We came down, left the low, traded up, took out the high, right? Came back down to the order block, respecting the order block, right? Dropped down, swept sell side, then moved back up and closed up above consequent encroachment of the bearish fair value gap that's supposed to keep us down. That's a bullish. All of that is bullish signatures, right? So the daily showing bullish signatures, the weekly showing bullish signatures, and it's all aligning with what the monthly want to do, right? Have we had any confirmation of doing anything? No, we haven't. Because what have we been doing? Just consolidating, right? What we said we was doing here. We're just consolidating. That's all we're doing. And when you look at the weekly candle, that weekly candle is showing you that we were just consolidating. We opened here, we closed there, we went down that far, we went up that far. So we were just consolidating. We were just hanging out right here around equilibrium, right? And where we opened up, right, just so happened to be the equilibrium of this consolidation range, right? What PD array is attached to consolidation, right? Expansion is paired with order blocks. Reversals is paired with Stops, sell stops, buy stops. Consolidation is paired with what? Consolidation is paired with what? Hello, it's me. Hello, it's me. Hello, Equilibrium. Shout out Kim. Is Kim the only one who keyboard or mic working? Kim, everybody else done went to sleep? All right, man, y'all sleep, man. I'm gonna go ahead and wrap it up because everybody's sleeping, man. Ain't nobody paying me no attention. We're gonna go ahead and wrap it up because everybody's sleep. Everybody sleep. Your messages are slow. My message is slow. How my message is slow? How my message is slow? Because I see Kim said equilibrium, right? I see Empire Trader said what's up, and then I see here Learn and Share say your messages are slow. How my message is slow? If my message is slow, let me see. Let me see something here. Let me see something here. Can you go over yesterday's price action? I'm confused.
No.
She gonna pull up and try to give me a job. Go pull up and try to give me a job. She typed that a while ago, and you were still asking. Oh, really? She typed that a while ago, and I was still asking. She's watching 5 minutes behind, maybe. All right. I'm finna do a test. I'm finna do a test right now because as far as what I can see, the way I got everything set, it should be, hold on, let me check it. I don't want to lie to y'all because it should be a 3-second delay from how I usually set it. Let me make sure this is still set like I always set it. Let me make sure this is set like I always set it. Live. Clickety click. Yep. Ultra low. It's set on ultra low. Right? It's set on ultra low right there. It should not be 8 seconds. It should only be 3. I'm gonna test it right now. I can't test it with my phone. All right. So I'm gonna turn this on. All right. I'm gonna turn this on. Turn this on. And I'm going. Mine sound instant. And I'm going. Mine sound instant. And I'm going. Mine sound instant. All right. So. All right. So. One. All right. One. Like almost 3 seconds. One. Like almost 3 seconds. One. Almost 3 seconds. 1, 2, 1, 3. See that? It's like 3 seconds. 3. See that? It's like 3 seconds. 1. See that? It's like 3 seconds. 3 seconds. It's like a 3-second delay. That's because I'm looking at from YouTube. That's because I'm looking at from YouTube. That's because I'm looking at from YouTube. So the messages. So the messages are 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 messages. See, I see it right there. As soon as it popped down, I see it right there. As soon as it popped down, I see it right there. As soon as it popped down, I see it right there. So it's taking a while for the messages to come through. So it's not like a long delay to come through. It's not like a long delay to come through. It's not like a long delay to come through. Shut up, Tim. So it's not a long delay for the audio, but it's taking like 10 seconds for the message to come through. Like when somebody types something in the chat. Okay. All right. Got it. So why I saw that right? Why I saw that right so quick? Okay. All right, this is what we're gonna do. We're gonna do the test. Y'all done got me on this now. Somebody remember where I was at on the price section. Y'all done got me on this right now. Okay, so when I count I'm gonna say 1, 2, 3, enter. Somebody put who? One person, right? One person. Well, it don't matter. Whoever it is, somebody type test in the chat. Don't enter. Just type test in the chat, right? Type test in the chat, and then I'm gonna say 1, 2, 3, enter. And when I say enter, you press it, and then I'm gonna count to see how long before I see it. All right, so type test in the chat right now. Don't enter yet. Type test in the chat. Go ahead. T-E-S-T, right? T-E-S-T, T-E-S-T. Okay, now test should be typed. So when I say 1, 2, 3, enter, press enter. 1, 2, 3, enter. 1, 2, 3. 3 seconds. I saw it in 3 seconds. It popped in 3 seconds. It popped. So the first one popped in 3 seconds. When I like Joker test in, Wayman popped in. It popped in 3 seconds.
Hey, you know what? Their YouTube may be behind. They probably got to fast forward a little bit on their YouTube.
Oh, it might not
It'd
be
like
on
that
live.
sometimes too now.
Yeah, they might not be on live over here with a little button right there. You
Yeah,
gotta make sure that button be
red. They
red.
got to fast forward.
Yeah, you might need, if you look at your YouTube and see if that little live is red. Because if that little live ain't red, then you'll be behind. Like if you like right here, right over there in the corner there, where it say live, if that's like if I pull this back, if it's a gray dot in front of that live, it's not live. And then see how I say skip ahead to live broadcast. Then when you hit that, then it puts you up at the live spot. When you hit that, then it puts you up at, yeah. So now, mystery solved. It's 3 seconds. Mine is slow. If you're slow, then that means you on a modem. You got dial up. If it's slow, you got dial up. You hear me? All right. Now, what was I saying on the price action? I done lost my stride, man. I done lost my stride. I don't even feel like trying to find it again. You got mail. She said she got AOL. You've got mail. What was I saying, man? I can't remember what I was saying. I done lost my groove. Consolidation is tied to equilibrium. Yeah, I know. I remember that part, but I don't remember what I was saying. So, anyway, as long as we in this area here, we're not trying to force any narrative. That's what I was saying. People always don't know how you see it in real time. This is it by looking at the signatures pertaining to the time frame that you're watching, right? If you're on the higher time frame rules the overall narrative, right? If you say, okay, what do you mean by that, Tim? Whatever your higher time frame is, you don't want to try to force a narrative on your lower time frames, that supersedes what that higher time frame is. So if your hourly chart is your higher time frame, you don't want to try to force your 1 minute, your 5 minute, your 30 second. You don't try to want to force these lower time frames to something that's contradicting to what that hourly time frame is saying, right? So if your monthly time frame is your higher time frame, right? You got to think about it. The monthly time frame is that's your 60,000 foot view, right? That's your 60,000 foot view. That's the time frame that you're looking at for your longer term investment and trading strategies, right? It's like that's your longer term investment and trading strategies, right? That's what you're strategizing for those who play options. You're strategizing for your leaps based off the narrative of the monthly, right? That's what you're strategizing for your leaps on. If you swing shares, that's what you're strategizing, right? Your next buy or sell. If you swing shares, you're strategizing that based off of the higher time frame, your monthly time frame, because you're expecting to hold this position for 6, 9, even 12 months. Like you're looking to hold it far out, right? You're holding it far out. So you're strategizing based off that monthly time frame. So if you're looking at something on a monthly time frame, right, it's going to take a while for these narratives to play out, right? It's going to take a while for these narratives to play out. Remember, we talk about this a lot, right? If we look right here, right, that area that I circle right there, right? These are daily candles. That area that I circle right there, right? Just look, if you was to look at the chart and just look at what I got circled, right? Compared to this and compared to this, right? That looks kind of like a funky little motorcycle, right? But this area here, what would you say price was doing in this area right there? What the first thing would come to your mind when you look at the area right there? What would you say price was doing in that area that I circled?
That's consolidation, right?
Yes, consolidation. Right? That's consolidation. When you look at it, right? Now, Joker put something else in there. Right? Joker put something else in there. All right? Now, accumulation, right? Don't get it confused. Accumulation and consolidation are not the same things, right? People often just use them like they're interchangeable, but they're not, right? Accumulation is what the algorithm is doing while it's consolidating, right? It's what the algorithm is doing while it's consolidating. Right? Because remember, what did we say? What did we say? There's a such thing as a power of 3. Right? What do we say the power of 3 is? The power of 3 is the what? Huh? The power of 3 is the what?
The action or the act.
No.
Accumulation, manipulation, and delivery, right?
Distribution. But what is this? This is what? They go here to learn and share. The power of 3. The power of 3 is the noun, right? Accumulation, manipulation, and distribution is the verb, right? They're not the same thing. This is the noun, right? This is the person, place, or thing. What does this noun do? This noun does that verb. It's not the same thing. Accumulation, manipulation, and distribution is what the power of 3 does. But you would hear people say, what's the power of 3? Accumulation, manipulation, and distribution. Oh, that's the same thing. No, it's not the same thing. The power of 3 is because of that. That's the now. Because if we look at, remember what we said, right? If we look at, you remember, y'all remember when I come in and be like, just pick this day and say, was that a power of 3 day? Right? And we be looking at the price, just looking at that candle, a person would say, yes, that was a power of 3 day. But if you go into that day, that may not be a power of 3 day. Why? Because we didn't have accumulation, manipulation, and distribution. We just had a bunch of back and forth, back and forth, back and forth, and just closed down here. Right? We opened here, went back and forth, back and forth, back and forth, back and forth, and just closed down there. That's not the power of 3. Right? So that's not a power of 3 day. Right? But if you open here, trade up there, trade down here, and then close there, that's a power of 3 day. That's accumulation, manipulation, and then distribute below a low. That's the power of 3. But if you open here, do a bunch of trading back and forth like this, and close there, that's not the power of 3. Right? The same way, this consolidation, right, is not accumulation. Right? Consolidation is when the market is trading in a clear range without showing an effort to leave that range, higher or lower. That's consolidation. Accumulation is when it's accumulating short or long positions. It's accumulating short or long positions. And how do you know which one it accumulates? Right? When it shows you, when it tips its hand on what it wants to do. When it tips its hand on what it wants to do. Right? And what does that come into play? With your narrative. Right? It comes into play with your narrative. Right? And then how does that work out? When you look at the higher time frame, when you look at because looking at this chart right here, right now, right, that accumulation that I circle right there, right, that accumulation that I circle right there, right, what can this possibly be? Think about what we've done. We've come here and we've come there. We come down to an anticipatory reactionary point. What can that right there possibly be? Think about what we've done. We've come here. We've dropped there. Right? What can that possibly be?
Institutional sponsorship?
Yeah, yes, institutional sponsorship, but this right here is the top of it right there. This is the top before that. So because of institutional sponsorship, right, we see this move to discount. Right? We see a move to discount. We come down here, right? And then we anticipating at some point coming back to there. So if we're anticipating coming back to there because institutional sponsorship is saying, okay, I'm moving price down to here, right? Once I get down to here, right, what have I done? I've let buy stops accumulate up here, right? And if I engineer liquidity and move away from it, at some point, I'm going to come back to it. So if I'm going to come back to it, that right there has the potential right now of being what?
ARP.
Look at what I'm drawing out here. Initial consolidation. There you go. Right? That right there. Now looking at this right here, it's got the potential to be an initial consolidation. Because we consolidated there. We expand it down. Right? So now when we come down here, we get a smart money reversal. Right? Let's just say this turns out to be our smart money reversal. Right? That protected low we was talking about. Right? Let's say this turns out to be our smart money reversal. All right? We get on top of this daily fair value gap like we anticipated. Right? Get on top of this weekly fair value gap. Right? All of it supporting the narrative of the higher time frame. Right? And then we make our way back up there. Then once we get over here, be like, oh, look, that's our initial consolidation. Right? But when you start to anticipate it, right? When you start to anticipate it, you could be like, oh, there's my initial consolidation, right? We've come back down here because since this here's my initial consolidation for a buy model, right? This right here, that right there was my smart money reversal for a sell model, right? That was my smart money reversal for a sell model. We don't have much information on this chart here, right? We don't have much information on this chart here. Right there. See? That's that high right there. Right? Drop down. We came down. Right? So looking over there, right? You don't have to get there. Right? Because why? Remember before we was like we had some divergence over here. Right? It'll be ideal to come and sweep that low. Right? But that right there would have been your smart money reversal right here for this sell model. Right? And since that's your smart money reversal for that sell model, all this little consolidation area at the top up there, that's your initial consolidation for a buy model. Right there. Sell model, buy model. Right? It would be ideal to sweep that, but you don't have to. Right? It would be ideal to sweep it, but you don't have to, especially if you have bullish divergence between the other sisters. And I think we checked that before. And I think we did have some bullish divergence. But at the end of the day, it still would be nice to sweep that to go back and attack it. And right now, we don't know if we're going to come sweep it. Why? Because it hasn't shown us anything yet. It's just been consolidating. Right? We've just been consolidating in this area. Right? As we see by this week's candle. Last week, we dropped down and hung out in this area. And this week, we still hung out in this area. Even though we're hanging there, we're still showing bullish signatures while we're hanging here. All right. Your accumulation is your consolidation. Your manipulation is your Judas swing. Your distribution is your trend. Power of 3 on a weekly, power of 3 on a monthly. Depends on how you look at the market. If the algo is accumulating on a higher time frame, you won't see power of 3 on the lower time frame. Hey, it's always there. It's always there, but we can't make it be what we want it to be, and we can't call it what we want to call it. Right? You have to call a spade a spade. Right? You have to call a spade a spade. Just because things are similar, don't mean they're the same. Right? Just because things are similar don't mean they're the same. Just like hear people say, this is the power of 3. No, that's accumulation, manipulation, and distribution. All right? That's accumulation, manipulation, and abuse. It's not the power of 3. The power of 3 is made from accumulation, manipulation, and distribution. Not the same thing. Right? It's not the same thing. Well, Tim, how can you say that? Let's go back to the example of the market maker models we was talking about, the buy model, right? Let's go to the example of the market maker model, right? Right, so we got consolidation, right? We got expansion here, and then if we come back up here and complete this market maker model, right? Like that, what do we have there? We have accumulation. We have accumulation. We got manipulation. And we got distribution above a high. Right there. Right? But that's a market maker model. Is a market maker model the same thing as the power of 3? Nope. They're not the same thing. Do they both have accumulation, manipulation, and distribution? Yes, they do. Yes, they do. We have accumulation in this first consolidation. We're accumulating positions. We got manipulation because we manipulate the price away from the buy side that's it is intended to take out. Then we come back and distribute above those old highs. So we have accumulation, manipulation, and distribution, right? Both of them are utilized in a market maker model. I mean, it's utilized in the market maker model. It's utilized in the power of three, right? Now, don't get me wrong. For nobody that's listening or looking, there's nothing wrong with the way you make it make sense in your mind, right? The way you make it make sense in your mind is totally up to you. But when you're teaching or introducing people to a concept, you always want to introduce it to them the way it came from the book, and let them decide how they want to interpret it. You got to give it to them straight from the book, right? Give it to them straight from the book and allow them to make up their own interpretation of the way it makes sense in their mind. All right? Everybody tracking with me? Everybody following? Everybody understanding? Okay, let's continue. Now, where was I? All right. I can't remember where I was. So we see that this week was we just consolidated. Right? Tim, we did a lot of moving. We did do a lot of moving. Did a whole lot of moving. I took some winning trades. I took some losing trades. You know what I'm saying? We did a whole lot of stuff this week. Right? We from peak to trough on the NQ, we moved 565.5 points from peak to trough. Right? We did a whole lot of moving this week. But when you look at the week as a whole, only thing we did was consolidate, because we traded in a clear range, right? A clear range without showing the desire to want to leave this range, right? Let's go over here. Let me look at the slides and read it and see if I can read it right off the slides. What would that be in? Is that in lingo? Is that in lingo, y'all? Up close candle. Discount premium. Consolidation. When price trades inside a clear trading range and shows no willingness to move higher or lower, right? Consolidation. When price trades in a clear trading range and shows no willingness to move higher or lower, right? Consolidation. That's what we did this week, right? And then we said consolidation was paired with, what is that? Which file would that be in? Is it order flow? Would it be an order flow, y'all? Is it an order flow? Offset accumulation. Offset distribution. That's the boot camp. Let me check the other one. That's the boot camp. I want to trade slides. Is the I want to trade slides? Order blocks. Mitigation blocks. No, it's not I want to trade slides. The art of reading price action. Where's that at?
I think it's in the one for IPDA. In the boot camp.
In the boot camp. IPDA. Yes, it is. Yes, it is. Appreciate you. Appreciate you, Jim, right here. So, expansion is paired with order blocks. Retracements is repaired with fair value gaps, right? Reversals is paired with liquidity pools, stops. Consolidation is paired with equilibrium. Expansion to order blocks. These are the PD arrays that's paired with the price action, the price moves or price action, whatever how you want to call it, right? Retracements paired with fair value gaps, right? Reversals paired with liquidity pools, right? Consolidation paired with equilibrium. Okay. Why is consolidation paired with equilibrium? Right? Why is consolidation paired with equilibrium? Okay? Because equilibrium is an area of fair value. Okay? Equilibrium is an area. I trade a little different. I understand ICT concepts, but I trade my own model. ICT comes the closest to just a small part of my model. My brother trades ICT exclusively. Okay. Like I said, whatever you call it, based off of what you trade, right? It is what it is. But when it comes to whatever concepts you trade, you want to give it straight out the book. If you trade Wyckoff, you want to call it whatever Wyckoff call it. If you trade support and resistance, you want to give it whatever support and resistance call it. If you trade supply and demand, you want to call it whatever they call it, right? But if you trade ICT concepts, you want to call it what the ICT concepts call it, because you can't mix the two and put it out as a package. You can mix it in your mind. You can mix it in your own trading, but you can't mix the two and say, hey, here's this new thing that I came up with, like I see a lot of people doing. I see a lot of people on the internet talk about, hey, look at these concepts that I made up. And when you start listening to them, they just talk about ICT concepts and they done named the order block something different. Right? It's just an order block, right? Or they put together two things from ICT and call it something different. What? Like one person I know, no shade at him, he got this thing called the fair value area. A fair value area, it ain't nothing but a fair value gap, a breaker or mitigation block, and he called it a fair value area. Oh, this is something I made up. No, it's not. You're just taking demand concepts and repackaging it, right? But that's neither here nor there, right? So consolidation is paired with equilibrium, right? Equilibrium is found where? Where is equilibrium found at? At a place of
usually
what?
around 50%.
Around 50%, a place of fair value, right? Around 50%, a place of fair value. So here we are. We see that here in our consolidation range, right? Our consolidation range from this week, right? The equilibrium was right here at the new, the opening of the week, right? Right there. Equilibrium was right there, 2 ticks away from the opening of the week, right? What did price do? Price moved away from that price, moved back to that price, right? Moved away from that price, moved back to that price. Moved away from that price, moved back to that price. Moved away from that price, came back to that price, right? Moved away, came back to it. Moved away, came back to it. Moved away, came back to it, right? That's what consolidation does, right? It keeps coming back to that area of fair value, right? Remember what Michael teaches. If price seems to be range bound, right, what will be a magnet for price, right? A new week or a new day opening gap, right? A new week or new day opening gap will be the magnet for price if price is range bound. Look at this week. What happened throughout the week? We moved away from the new week opening gap, moved back to it. Moved away, 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 moved back to it. Right? Acting as a magnet for price. We're consolidating, right? Where does price tend to consolidate? Like Jim said, at 50%. Right? We had a whole week of us consolidating right here. Right? If we go out to a monthly chart, right, and we look at our handy dandy Fibonacci tool, right? Look at our handy dandy Fibonacci tool from the lowest low to the highest high, right? Right there is equilibrium, right? 19,944 and 3/4. That's equilibrium of the entire range, right? If we go back down to these daily candles, right? Where is that equilibrium found at? Right there, right here is that equilibrium. Where is price consolidating? Right there at that equilibrium. It's not a mistake that price is consolidating there, right? Why is it consolidating there? That's an area of fair value. Why is it an area of fair value? Because it's not in a premium and it's not in a discount. It's right smack dab in the middle of the highest high and lowest low of our entire dealing range. Right? So now that we're there, we're just consolidating right there. Remember we said we was in between the tail of two cities. A bullish fair value gap here and a bearish fair value gap there. And we was trading in between it. Right? We're trading in between it and just not moving, right? Why we're not moving? Because we're at an area of fair value, and now the algorithm is just engineering liquidity. It's building new structure, right? It's building new structure. Why is it building new structure? Because we've come to a point where the algorithm has to make a decision, right? In this particular case, what point is that? A discount PDub rate on the monthly time frame, right? We've come to a discount anticipatory reactionary point on the monthly time frame, right? So until we break out of this area, right, we still don't have nothing to go off on as far as our longer term trading and investment decisions, because right now we're just consolidating. And if you put any money in the market while you're just consolidating, you run the chance of just having that be dead money, because it can consolidate. Remember what we said up here, right? We said that this was an area of consolidation. We looked at this before, right? We'll be generous and start here. Right? We're not going to go all the way back to the edge. We're going to be generous and start here when we drop down into this area, right? So from there, all the way over to when we leave this area, which was right there on that candle there, right? That right there is 47 trading days, 71 days in totality, 71 days in totality. Right? That's a long time. That's a long time. That's over 2 months. Right? That's over 2 months. It just said if you got 30 days and you got 30 days in a month, that's like 2.5 months, right? Of just consolidating that. Can you imagine? We looked at this before, because we were like, if you would have bought some calls over here, and when we was over here, you would be red right now. You know what I'm saying? And price was going up and down, but you would be red. But that's just dead money, right? Sitting in that area. That's just dead money, right? Why? Because it's not moving outside of that range, right? It's not moving outside of that range, okay? Now, when you're looking at price and you understand the narrative of what price should be trying to do, right? You're looking for certain things, right? You're looking for certain things. Best case scenario, right? If you want to go long, best case scenario is a sweep of sell side, right? A sweep of sell side, and then allow some opportunity to buy in a discount somewhere, right? That buying in a discount can come through an advanced way or a way that Michael teaches to trade it, right? And everybody who know, well, the gang, y'all understand, right? Especially the ones that, went through the boot camp and stuff like that, right? If you're anticipating this right here to become a breaker, right? Right? So when you come up and you start to drop, you're anticipating this right here to become a bullish breaker. When you come down and sweep out the liquidity, you're anticipating this to be a breaker, right? So then the advanced way to trade it would be looking to get long over here somewhere in a discount. That's the advanced way to do it, right? Looking to get long over here somewhere in a discount, and you can target back to there or higher, okay? But the way you're taught to do it is when we come back up here, now you're looking for a chance to trade in a discount on a pullback, right? You're looking to trade on a discount on a pullback. Now, you won't always necessarily get a chance to trade all the way back down to a discount down here, right? Why? Because this breaker's job is to keep traders trapped underwater. So if it's exceedingly bullish, you don't want to see it digging down into this breaker coming all the way back down to a discount of this move here, right? You don't want to see it digging all the way back down into a discount of the whole move, right? You want to look for it to give you a trade of a discount based off the breaker, right? Like at a point from here to there when you leave this balanced price range, right? Once you leave the balanced price range, looking for a discount of this move, right? So once you sweep that sell side, you're looking for opportunity to get long in a discount, right? Whether you do it the advanced way of looking for a discount over here, or you do it the way the concepts are taught once you get the confirmation and looking for a discount over here, right? To buy off of. All right. Quick glance at price. We done been on here for a really long time, so we'll glance at price throughout the week, right? Right. Glance through price throughout the week here. So, price opened up here, right? Price opened up here early in the week. We traded down. This was Monday's trading, right? We traded down and we moved up, taking out the buy side, right? We pushed up again, took out the buy side during New York, right? And then coming into Tuesday, that's a new day opening gap right there. Coming into Tuesday, we dropped back down into back into the range. We'll say traded up back to the new day opening gap, right? And then we dropped it like it's hot during the New York session. It came all the way down to the new day opening gap from the 3rd, which would have been, from the 11th, which would have been the Tuesday before. So on the 18th over here, we traded all the way back down to the prior Tuesday there, taking out the sell side, right? Right there at that new day opening gap, right? Hung out there for a while, opened up a new day here on Wednesday, right? It's a new day opening gap there. Y'all probably can't see it all that well, right? And then we kind of hung out there for a minute, right? We traded away from it, came back to it, dropped down, came back to it, traded away from it, came back to it during the New York session, and then we took off, boom, came back up to the new week opening gap, right? Traded back up almost to equilibrium of the range, dropped back down in the afternoon into the range, taking out the sell side, and then took off again, going all the way back up and created relative equal highs in the afternoon session. Relative equal highs from Monday. All right. Then drop back down and open back up here on Thursday. So that was Monday, Tuesday, Monday, Tuesday, Wednesday. Hold on. Monday, Tuesday, Wednesday, yeah. And then Thursday, over here on Thursday, we opened up, traded back up, created like some relative equal highs here without taking out that buy side from the relative equal highs there, still showing respect for the highs. We came up here, showed respect for the highs. Came up here, showing respect for the highs, right? So we're respecting the buy side, and we're continuously taking out sell side, right? We keep taking sell side, taking sell side, taking sell side, right? Taking sell side. We keep taking sell side. We came up here, didn't take the buy side, dropped down, took sell side again, right? So we're showing a willingness to want to go down, right? So then, since we're showing a willingness to go down, what do we do here? We blast off, take out buy side, and then drop down, right? If you're showing the willingness to go down, right, what do you want to see? You want to see attack of opposing liquidity, boop, take out the buy side, then price drops down, right, and starts to make a trek down, right? And we have our Friday open right here, right? So this is our Friday open right there. So we open up on Friday. After Thursday, we come down there. We've took sell side again. We've gone up on Thursday during the New York session, taking out the buy side, right? Drop down, right? And we've created relative equal lows, all right? Then we close off the low. Friday, we open up, right? We trade down, we drop down, take out the low right there, drop down, take out all the lows, and then we come back up and close the day back up here right around like Thursday's new day opening gap right there at the higher end of this daily bearish fair value gap. Right? So that was how price walked through the entire week. Right? That's how price walked through the entire week from day to day to day to day. And like I always say, price is fractal in a linear way too. Right? You see things that repeat over and over in a linear way. Right? You see how price continued what it was doing from day to day to day to day. Right? And when you're watching price, right, you can watch it from a standpoint of what is it doing for the overall picture, or you can watch it from a standpoint of let it create some structure, and I'm just going to trade inside this structure. Right? You can watch it however you want to watch it, as long as you understand how to interpret the signatures. But when you really study the price and look at it, you see this. We see this all the time. We've been doing this for a few years now, and we can see that throughout the entire week, right? We can see signatures of where price continues to show you these signatures, how we move from day to day to day to day. And we can see the signatures as they play out. And I know it's easy looking at it in hindsight saying, oh yeah, Tim, it's real easy to see it when we map it out. But when you think about it, right, we were talking about all of this stuff as it was happening. All of this stuff as it was happening. Right? And I don't think, correct me if I'm wrong, last week, I can say one day, we got a little tripped up. I got caught up on the lower time frame and got a little tripped up on the price reading. But this week, I don't remember us getting tripped up. This week, everything that we was watching was playing out. Everything that we was saying, hey, we want to see this, it played out. We had some high resistance here, some seek and destroy there, but everything played out, and we watched it play out in real time, and we called it in real time. Right? Everything that we talked about. Even today, when one of the gang members was like, I was expecting price to go back up. Right? When we first got on, I told you, I said last night I was up trying to catch this short, but it played out after I went to bed. I was trying to catch a short over here. And then the individual was like, I was expecting it to go up. And I was like, why were you expecting that? The higher time frame was saying we going down, right? And it was saying we was going down. We don't try to call the bottom. We don't try to call the top. We just look at the narrative and go down for the detail of the narrative. Speaking of look at the narrative, Jim, saw your message. Yes, that's fine. We will spend more time on, you know what I'm saying, how to develop the narrative. I mean, we do it already. We do it already, but we'll spend more time on it. And like you say, if you want to share your screen and talk through what you're seeing, right, then, you know what I'm saying, we can do that. Because a lot of times what happens, and even with me, a lot of times what happens, and like the same thing we saw today, like when the other gang member was talking today, we would look at something on a higher time frame, and then we get down on the lower time frame, we just totally forget everything that we just said we was looking for, right? And then we get down there and start getting confused. Like, that's why we got to train ourselves to remember, this is what I'm looking for. And that's why, like, you hear a lot of people, like Casper, right? Casper, he like, I think it's the stupidest thing that people just go and say, I'm only bullish on the day, so I'm only looking for buys. You're leaving money on the table. If you can trade both ways, that's you. I feel like it's rude to say, oh, it's stupid to tell people to do this, because some people, they need one thing to focus on, right? If they don't have one thing to focus on, then it's too much. They become overwhelmed. They start making mistakes. But if they got one thing to focus on, then that's helpful. Like, if you don't really understand it to the nth degree, right? And you say, okay, the higher time frame is bearish. I'm only looking for good sales setups, right? And if it never gives you a good sales setup and you say, okay, it ain't never giving me no good sales, there's nothing wrong with that. That's not stupid. That's just your trader identity. That's your style. That's your model, right? And it's a good thing to have something to focus on, right? I see a whole lot of stuff in the chat, and y'all know I'm not fun to go back and read that there. I'm sorry for whoever put it in the chat, but I just glanced over there, and it's a freaking dissertation over there. I am not fun to go back and read that. Do anybody got anything for me? Right? Do anybody got anything for me? Again, gang. It's a poll inside the polls channel, right? Please, if you're still in here, if you stuck around this long, please go take the poll for me. Let me know if you will be participating in this Conquering the Asian session. All you got to do is go in there and click yes or no. Right? We got 16 people that have voted already. Right? Go in there and click yes or no. Will you be participating? I will be dropping the WAP link for it. It's going to be March the 12th through the 23rd. It's going to be a nightly thing during the week, Monday through Friday, right? Monday through Friday, start 8 p.m. to 9:30 p.m. every night. We're going to meet on Zoom, and it's $100 if you want to participate, right? We're going to have some prerequisite material that you're going to need to cover before we go in. It's going to be pre-recorded. I'm gonna drop a few videos for that you got to look at. I ain't gonna say you got to look at it, but it'll be good if you look at them so everybody can be on the same sheet of music, right? Cause during that time, I ain't going into teacher mode. I'm not teaching you what a new day opening gap is. I ain't teaching you what a breaker is. I ain't teaching you what a dealing range is. I'm not teaching that. I'm not sharing ideas on that. You know what I'm saying? Focusing on the concepts, right? And yeah, let me know. And then the second week, so the first, dropped it on the 1st, and then on the 8th, since that's a Tuesday, then on the 8th, then I'll make the link public, right? And then it'll be available up until the end of April. It'll be available to buy up to the end of April or until the slots sell out. It's going to be limited slots, right? Now, it's going to be May 12th through May 23rd. That's when the actual workshop going to be. That's when the actual program going to kick off. But it's going to be on sale from April 1st to April 30th for the gang, and from April 8th to April 30th for everybody else, right? Or until it sell out. Right now, I'm saying that I'm not going to have more than 20 to 25 slots, right? I'm not going to have more than 20 to 25 slots, right? Right now, I don't know how many people in the gang said they want to do it. So based off if a lot of people in the gang jump on, right, I may switch it to 30 slots. But right now, it's either going to be 20 or 25 slots. No more. If it sell out, it's sold out. Right? If it don't sell out, it don't sell out. And then after that, we're going to also do, well, I'm thinking about doing one, the same thing, except for conquering the no trading live. I do not trade live. We do not trade live. We read the tape and we look for the signatures, and in this case, we're going to have certain setups that we see if they play out during that time. But I do not trade live with anybody. All right. I don't advise nobody to trade live. I'm not a financial advisor. I'm not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. So it's going to be from 8 to 9:30. Right? That's the time, from 8 to 9:30 every night. Right? Looking at the price during the Asian session. And then I'm considering doing one for the London session. Right? I'm considering doing one for the London session. It's going to be the same concept, the same thing. 2 to 3 different models, and then you know what I'm saying, going through and tape reading during the London session and looking to see if those models play out, and looking to see how to effectively trade the London session, right? Because the way you effectively trade the London ain't the same way you effectively trade the New York. Cause why? The New York is more volatile, right? The Asian is less volatile generally, right, than the New York. Right? The New York ain't always the most volatile. It's always the most volatile, but the moves don't always be as broad. Right? But it's always the most volatile. Right? So the way you enter, you got to tailor the way you enter. Right? You can't just jump in the New York, because it's going to require you to have a huge stop, right? You can't just jump in at if you got a huge imbalance, right? You probably need a little bit more confirmation, unless your stop loss can soak up that huge imbalance, right? You got to tweak it a little bit different inside the New York than you do inside like the Asian. But that's that. Yes, tape reading at price. Yes, tape reading at price. You ain't paying for the tape reading. You paying for my time. That's what you paying for. You paying for my time. You paying for me to sit down and what I'm doing right now for free. What I'm doing right now for free. For that right there, you're gonna be paying for it. Right? You're gonna be paying for it. Cause right now we're just looking back at price. Right? All right. That's all I got. Ain't nobody pulling up with no hard hitting questions. So we're gonna go ahead and call it there. We've been on here for a minute.
I have one question from
What's up,
today's
Jim?
price action. At 9:26, when we went to the low, it was the low of the day as well as the low of the week. We just barely went below the previous
That prior day low.
there.
What we was looking at this morning, we said we just dipped below that prior day low. And we was talking
Yeah,
about, and you was talking about when we dip below it like that, if price is really bearish, you want to see a deeper dig than that.
yeah. It just sort of surprised me that price had moved so much overnight to only just barely touch it and then respond off of it. It's like it hit a brick wall where it was not allowed to go out of bounds of the consolidation range.
Yeah, pretty much. That's pretty much what it did, right? So, like we said this morning, was like if price, when you just see a little dip below there like that, let's go back there. Let's go back in time, right? When we was watching this here, right? When we came down here, when we dropped down, right? Because we was talking about price was coming down, right? And we dropped there. We said if price, when it does this, you want to see a deeper dig if price wants to continue down, right? But when we came there and we dropped below it, we turned around and got a bullish breaking market structure right there, right? So as soon as we got that bullish breaking market structure, now, right, we have a Judas swing, okay? So when you get that Judas swing, that's a bullish move. Unless we're in the midst of some heavy manipulation right here at this point, right? At this point here, you're now shifting to a bullish mindset and you want to see that low protected, right? But like I say, all you need is that little bit right there to run to offer that price. Whoop, sweep that, and then move back up, right? Because you've reached a destination, right? Based off how price was selling off, now you've come to a prior day's low, and we've taken out all of the sell side, right? Because we look back over here, right? If we look back over here, this right here is the start of the week, right? So this right here was the lowest low that we had made this entire week, right? So when we came down over here on today, right, we came down and we traded down all the way below and tapped the lowest low on the week. So we've come all the way down and bumped out somebody, pissed somebody off. We've come down and pissed somebody off by taking their stop out, and they just knew they were safe, right? So yes, when you see a little tap like that, you want to see it dig deeper, but when you're coming down to an anticipatory reactionary point, right, which is here at this new day opening gap, what we always say, how much farther below this can you go, right? There's a low sitting right there. So you get to your anticipatory reactionary point, you're anticipating price to be supported by this, right? We drop down, we tap that low, right? If you want to buy, right? If you want to buy, right? What do you want to see first? You want to see sell side be taken out, right? You want to see sell side be taken out. And what do we say about the stronger breakers, right? What creates a stronger breaker?
Taking 2 time frames of liquidity.
Yep. So we come here, we drop below that, we drop below that, right? Then we come back up, creating the breaker, right? We come back up, creating the breaker. Now, we immediately come back down and trade into the rejection block, right? And did not take that low. But once we trade up and away from this breaker, we come back down to that breaker, and we start to move back up. You know what I'm saying? Right? But this little move right here, this is the move that it like confuses you, right? This right here is just the high resistance that confuses you. This right here is what when Michael be talking about, just look at this stuff right here as time distortion, right? He'd be like, just look at this as time distortion. This is the stuff that throws you off, right? Because you're like,
Yeah,
okay,
that's the part where I'm not sure if it wants to go down more or if it's just going to turn around there.
And you know what you do?
You wait.
Exactly. You wait. That's it. You wait. You there's no magic wand to say, oh, this is what it looks like. This because you know why? Look here. Inside this area here, right? What's indicative of high resistance? Give me the signatures of high resistance.
Deep retracements and overlapping candles.
Yes, deep retracements and overlapping candles, right? So now we come here, right? Let's walk through this. We come here, we go up and we come down, taking out 2 levels of liquidity, right? Take out the short term, you take out a higher time frame level, all right? So now we've made that move on the way down, right? We made 2 bearish fair value gaps on the way down, right? Coming back up. How many fair value gaps we made coming back up? From here to there. How many fair value gaps we made coming back up in this price leg right here?
I said none.
None, right? We make nan fair value gap on the way back up, right? So you see some people that'll say, oh, this right here is displacement. No, that's just expansion, right? That's just expansion. Why is that just expansion, right? Because we ain't got no fair value gaps in there. Right? We ain't got no fair value gaps in there. All right? So we just expand up, right? And once we expand up, like we've expanded up and now we have an opportunity to create a fair value gap. Man, we talked about that this morning. We was like, okay, we got an opportunity to create a fair value gap, right? Since we got an opportunity to create a fair value gap, but then we come all the way back down and trade into here. So now what do we say? Okay, now that this has happened, you want to see if the algorithm just going to use that as immediate rebalance, right? And what happened? What do you want to see if it's immediate rebalance? First of all, you really don't want to see it close way down here. You want to see it come down and then close as if it's want to go back in that direction. But secondly, once that happens, you want to see this candle here start getting up out of there. But what happened? This candle kept going down to the order block, right? So now you know this is not an immediate rebalance, so it ain't ready to go back up, right? So, okay, let's chill. We got a break in market structure, but it ain't ready to go back up, right? Come back to the order block. We respect the order block, right? We respect the order block, right? Then we trade back up again, okay? And then we come back down again. We still respecting the order block. Then we come back down again, right? Trade down below the equal bodies, right? And then we come back again, right? Trade up or down. Don't know which way we went first, but we trade down and we don't take out the low. Now that we don't take out the low, what do we create right here? Right. As we moving up, right? Now we create a fair value gap. After we come below into this rejection block, take off, create a fair value gap. Now we come back down to the fair value gap there, right? So all of this over here, this is when we're trying to force what we want. Why are we trying to force it? Because we saw that we made a breaker and we're looking at this right here as displacement. Oh, we got displacement up. No, we got an aggressive expansion. Yes, we did. Right? But it's not, the algorithm is not showing you that it wants to keep going by making fair value gaps and continuing to reach towards something, right? When it had an opportunity to make a fair value gap, it traded back in. Like in this case right here, this right here was an immediate rebalance. We came up, had an opportunity to make a fair value gap, traded back down into that wick and closed above, and then the next candle took off and took out the liquidity. That's an immediate rebalance, right? So this immediate rebalance, his job is done. We came up, we took out the liquidity, right? That immediate rebalance job is done. So now that we've taken out the liquidity, right? We've had a sweep, right? We've had a break in market structure showing that you want to go up, right? So what do we say? If you want to go up, you want to see a sweep, but then you want to be given an opportunity to trade in a discount. We can't try to force it when we want it. You have to be given an opportunity to trade in a discount, and you want it to come based off of the algorithm showing you that it's ready to go, right? We don't want to come in here and start trying to make, yes, you can come in here and say, oh, I'm just going to trade off this order block and put my stop below that low. Yeah, ain't nothing wrong with that. You can do that. If you get stopped out, so be it. If you don't get stopped out, so be it. Right? But then you got to sit through all of this. Right? When you just wait, chill, be patient, and say, okay, I'm going to wait on time and price. Right? Come over here to 1010. Right? Macro time. Right? So we go to our macro time and we come here. Right? Right? So we come over here. In our macro time, if you missed this opportunity here, right, where we went, right, we displaced up, right, traded back down into there. Where do we go? Boom, low hanging fruit taken out, right? Matter of fact, that would be a low hanging fruit, but boom, took that out. Its job is done, right? Traded in, boom, it's done. Trade over, right? And then once we did that, we dropped back down into the order block during the macro time, right? Drop back down to the order block. We go up, right? Make a high, and then we consolidate here, right? So now we're consolidating there. So now we're consolidating here, right? And price has shown you that it's bullish. Why? Because we've gotten another break-in market structure there, right? We already had a break-in market structure here. So price is showing you bullish because we got another break-in market structure here, right? And so now we're saying, okay, we're bullish. If I'm bullish, what's the best case scenario? Right? If I get a sweep of liquidity, on the sell side here. So here we are inside the macro time. All right, we're in the macro time. You missed this over here. That trade is over. Inside the macro time here, right? We got sell side, we got buy side, right? What do? We drop down off of this fair value, this bearish fair value gap there. We drop down and sweep out the liquidity, right? We don't take out this low. We come down here, make equal lows. We don't take out that low because we talked about that. We was like, it went there to the tick, but we didn't print what we needed to get picked up under that low, right? So we drop down, we take out that low, right? And then what do? We displace up. What do we have here? A fair value gap, right? There go your displacement. Trade back down into that fair value gap, into that inversion fair value gap. Take off. Low hanging fruit hit. That trade is over, right? That trade is done. Low hanging fruit is hit. That's it. It's over. Yeah, it came back and gave another opportunity, but who cares, right? Who cares? It came back and gave another opportunity in this case, but the trade is done, right? When time meets price, that's when you look for your opportunities. We don't try to force it in here. If we're not sure, sit back and wait on more information. You're not seeing it wrong. It's just not happening in the time that you want to see it. Right? You're not seeing it wrong. It's just not happening in the time you want to see it. Right? Just not happening in the time you want to see it. If it ain't happening, don't force it. Right? If it's not happening, don't force it. Do it make sense? Or should I say, was that helpful at all?
Yeah, that was helpful. I just expected it to take more liquidity when it got to that low, but it didn't.
Yeah. And that, when we talked about that, when you see a dig like that right there, right? And when you see it just tap the liquidity there, right? If you want to see it dig deeper than that, but that's all it takes, right? Because when we came here, we tapped, it was like, yeah, we'd like to see it dig a little deeper than that. But once we got this, right, that's when we said, hey, we've switched to a buy program here, right? 1 minute buy program, 5 minute buy program. Remember this one with like these time frames on the buy program, this one here, whatever, you know what I'm saying? In the buy program now, we're looking up, right?
Yeah, the thing is, when it just taps it, it makes it seem like they're equal lows with the other one, and that it might want to come back down there again.
I'm glad you said that, right? What constitutes a high probability equal low or equal high? When the one on the right is what? So if we come here and we trade through that low, right? All right,
when
man.
the one on
Have
the
a
right
good-
is
Yeah. Have a great
when the one on
weekend,
the
Joker.
right comes close to it but not touching it yet.
Yes, when the one on the right is higher for a low and the one on the left is lower for a high, right? Because you're engineering the liquidity. You came down to it and didn't take it, right? That makes it a high probability low. But if we come down and touch it, we've taken it, right? And if we're at a place where you're anticipating price to turn around, there's no guarantee that you will get that deeper dig, right? If price is exceedingly bullish or bearish, right, all you need is that little touch and go. Just like, remember what we said about PDub, like trading into a fair value gap? We just want to see it touch it and go. If it's exceedingly bearish, touch it, go. If it's exceedingly bullish, touch it, go. Same thing. All PD arrays the same. If price trying to hurry up and get out of there, just touch it and go. Right? Just touch it and go. Now, sometimes you will get, like we talked about with was it the Asian session? I think it was the Asian session. I think it was in the Asian. Because I was watching the Asian last night, so it might have been the Asian. Okay, I need Thursday at here, right here. All right, let me knock some of this off. Okay, knock some of this off. Matter of fact, let me hide all of this stuff. It's gonna hide everything. All right. So let's go down 5-minute time frame. This. And 20 to 9:30. All right, yeah. All right, so we'll talk about this earlier today, right? So just like this right here, that was the high. Set this 6. Set it to the beginning. So we're gonna put that at 1800. We're gonna put that at 2300. So from 6 to 11. Okay. So right there, coming in right at 6 o'clock. Right, so we made a high. Okay. And then we came down and made a low. Right, we made a high and we made a low. All right, so starting at 6 o'clock, right, that was a high, that was a low, and then when the Asian session started over here at 8 o'clock, right, this is the start of the Asian session right there. Right, move it to the side. So this candle here starts the Asian session, and so once the Asian session started, we had a low, right, and then the first 30 minutes of each session, that's your opening range, right? And we're gonna get off here in a minute because we've been on here a really long time, right? And then so for the first 30 minutes, this is the 8:30 candle right here. That's the 8:30 candle there. So that's your highest high during that opening range, right? So now you have, right, from the start of the session, this is, you got buy side and sell side, right? That's your range there from the beginning of the session, right? And then as we come into a new session, right, this is the opening range high and low. Okay, so now what I was saying is, you won't always get that deeper dig, right? And sometime you will, because we come here, right, and we push up above this right here. We got a pretty good push above this buy side here, right? And then once we came into the opening range, right, we just got a quick little poke above, right, the opening range buy side, right? So now in this case right here, and it ain't gonna be exactly like this every time, since we're not at a, like just say if we was at an anticipatory reactionary point and we was looking for maybe stretching up and touching some liquidity there, right? So poking above that there, you would have to allow for that to be enough if we was at some higher time frame anticipatory reactionary point. But since we're not here and we just poke above, now this is the place where you really have to allow for, are we going to get that deeper dig? You see what I'm saying? Are we going to get that deeper dig? And then, so now since we poke up there, right, and then we drop back down, and our higher time frame is saying we need to be trying to sell. So now we're looking for a reason to sell over here, okay? We're looking for a reason to sell. So now when we get that little poke above there, right, we don't get no displacement down where we can trade back up into a SIBI or anything like that, right? So then as we come down, no fair value gaps being made, right? We trade down to a bullish fair value gap, and then as we trade back up, right, we create a couple of fair value gaps there, right, on the way up, right? So we get a deeper dig, right, above this buy side and above the one that we just made. But this time when it comes down, right, now we're starting to have imbalances as we're coming down, right? We got a volume imbalance there, we got a fair value gap there, we got a fair value gap there. Now we're getting some displacement down. So now we're showing signs of something that we can trade off of, right? Now something we can trade off of. So it's like when you're watching the price, you want to look for the signatures that aligns with what the higher time frame is saying, right? You want to watch for the signal that align with what the higher time frame is saying, and say, in like, you don't want to say, okay, every time we do that, I expect it to do this. Nah, yeah, when we do that, sometimes we anticipate that, but we have to realize, where are we, right? And then as soon as we get that signature based off of where are we, right, we don't keep focusing on, oh man, this should go further, this should go further, this should go further. No, right? We've got our, you know what I'm saying, we got our confirmation on the opposite end, right? And going back over there, we was talking about here, right down here, right? Once we trade it down here, we anticipating price to come a little lower, right? This was our, I think, that thing there, right? Once we traded down there, right? We traded down here and tapped it, right? We saying like, okay, we expect price to go a little lower, but remember, we've come to a daily low and we're at an anticipatory reactionary point, right? We got a new day opening gap that we're at. We stretch beyond there, we touch that low, and then, right, we take back off, right? So now we ain't looking low no more. Now we're looking up. It's giving us a reason to want to trade up. We got inbound. This is the 5-minute time frame, but we got fair value gaps. We got volume imbalances, right? This on the 5-minute time frame. On the lower time frame, whatever we got to trade, you know what I'm saying? But it's like, look for the signatures that support or invalidate what you're looking for. And in this case right here, right, this invalidates the looking down, right? This invalidates the looking down. And then if you remember this morning, when we got here, we wasn't looking down no more. We were looking up, right? Because that right there, we even said, we expecting to go lower, but once we got this, we're not looking down no more. We're looking up. All right? It's just practice. Practice makes perfect, right? It's not going to happen overnight. It's not going to happen in one sitting. It's not going to happen in one 2.5 hour live stream. It just takes practice. Takes practice. I've been trading ICT concepts exclusively for over 2 years now. Might be, let me see. I retired in 01. 3 years. I've been trading ICT concepts exclusively for 3 years now. But anybody else got anything? Nothing. Who all still in here? Who hung out this long? Who hung out this long? Put a 1 in the chat if you still in here. I want to see who hung out this long. How did you make?
It's probably just me now.
How did you make? What's up, Hemi? What's up, Ro? What's up, Empire Trades? How did you make the crossover from looking at your previous method? What do you mean? How did I make the crossover? Like, what made me stop using the other stuff that I traded? Did you stop trading totally until you fully learned and vetted ICT? Nah, I just I started trading ICT the dumb way. I just started trying to implement it. If somebody showed me something, I just started trying to implement it.
It was a pattern matcher at first.
Yeah, I was doing it the dumb way. And then as I was doing it the dumb way, I started to actually do it the right way, like back testing and really learning the strategies, and then started like implementing it like one thing at a time. Because if you go back and look at like throwback videos, I had a setup called the liquidity run reversal. That's the only thing I used to trade. I called it the liquidity run reversal. And all it was just like, it was similar to the ICT 2022 model. Matter of fact, when he dropped the 2022 model, I said, man, that's my model. He done stole my model. That's the liquidity run reversal. You remember the liquidity run reversal? Yes. Now that's all I used to trade. And then I tweaked it. And then once I started to learn more concepts, I was like, I can't just look for this one thing. I need to be able to, you know what I'm saying, trade whatever I see. And then as I learned more stuff, I started implementing more strategies into my trading. And then now I don't even have a entry model. I just trade what's in front of me. If I see it there, I take it. I don't have one entry model that I use. All right. Does the model change as time goes on? You talk about your own personal model. You can tweak your own personal model, but like the concepts don't change. Don't nothing change about the concepts, but you can make tweaks to your own personal model. Like as you collect data, you be like, okay, I need to tweak it like this, tweak it like that. But you can tweak your own personal model, but like the concepts don't change. Don't nothing change about the concepts. It's just like what you learn about when you learn the strengths and weaknesses of your model. It's perfectly fine to tweak it. Like with the liquidity run reversal, when I first started doing it, my Sibi or Bissi that I was looking to trade off of, it had to be one candle. It had to be one Sibi or Bissi. It couldn't be two fair value gaps coming out of that range, giving me the break. If it had two fair value gaps giving me the break in market structure, that wasn't my setup, and I wouldn't take it, right? But then I start to learn, like, okay, I can take it, but I need to wait for like another confirmation, maybe on a 1 minute that, okay, I can go ahead and enter off this top fair value gap, or maybe I got to wait till they come to the bottom fair value gap. I started making little small tweaks to it. Multi-dimensional, not just the one trick pony. I like it a lot. What are your thoughts on the silver bullet model? The silver bullet is cool, but the silver bullet changed to something else. When I first got introduced to Michael, the silver bullet was buying or selling at the last stage of distribution or accumulation in the market maker model, right? And then back in I think 2023, I can't remember, he introduced the silver bullet now, and it's just like a fair value gap trade at a certain time of the day, right? It's a fair value gap trade at a certain time of day between like 10 and 11, or between 3 and 4 for the London, and I don't know if he did one for the Asian, but for the London it was between 3 and 4, and for the New York it was from 10 to 11, between 10 and 11. So it's there's nothing wrong with the silver bullet. The silver bullet model, it's a good model, but just like anything, you got to start with narrative. You can't just look for a sweep of liquidity and then enter, right? You got to understand what the draw is. If you don't understand what the draw is, then you're just a pattern trader, and you probably gonna get punched in the face more times than not, right? You want to understand what's the draw on liquidity, so that when you see the liquidity sweep, like with the way the silver bullet is, with the silver bullet, what you're looking for, it's silver bullet in like the 2025 model that he's trading. It's the exact same thing as the silver bullet. You know what I'm saying? Exact same concept, right? The exact same concept, because and what I mean by that, right, is if you're looking, right, let's just say here, right, let's just say we're here, okay, let's just say here, you get here, right, let's just come here like this, all right, so down here. All right. So if if we look here, right, and if we look here now for hot dog it. All right. So if we look here, right, this right here is your silver bullet window, right? That's your silver bullet window. This is when you're looking for the trade, right? This is when you're looking for the trade here, right? Depend on who you ask. I don't remember like all the in and out details of the silver bullet the way Michael teach it, because I've never been a silver bullet trader, right? Because I'm like, that's just the liquidity run reversal restricted to time, right? So I hear some people talk about it and they say everything has to form in here, and then some people say if you trade back to a fair value gap within this time, yada yada yada, whatever. But the concept behind the silver bullet is you see a break in market structure and then a retrace back to a fair value gap. Okay, break in market structure, retrace back to a fair value gap. Now, if we look here, right, we go up, we got a break in market structure, right, and we retrace back down to the fair value gap there. All right, this right here, we came and kissed it. Don't know if you would have got picked up or not on there, but that's the same concept of the silver bullet, a break in market structure, a retrace back to a fair value gap. But you don't want to just enter because we got this break in market structure and retrace back to the fair value gap. What makes this break in market structure and retrace back a high probability? Because we came here first and swept liquidity, right? So we swept liquidity first, and now since we took our buy side, our sell side, we're looking for a reason to buy in a discount, right? So we swept sell side, right? In here we expand up, right? And then we retrace back down into a discount, right? So we swept sell side, expand up, retrace back down to a discount. Now, like we always say, this is the way we're taught to do it because this is the confirmation way. But if you are in tune with the algorithm and you're anticipating this, now we can, before we leave this area, let's take that candle there. Now we're gonna go down to our 1 minute time frame. Right, we're gonna go down to our 1 minute time frame, and now, right, let's go back to 5 minutes real quick so I don't lose you. Right, everything to the left of this line is looking to trade off of this sweep of liquidity the advanced way, meaning you're anticipating, right, this move here to support price, right? We're looking for that to support price, right? Because we come down and take in the liquidity, and we're looking for an expansion up and a retracement back to discount, right? But if you are anticipating this move, right, once you take the liquidity, now you can be looking for a reason, right? You can be looking for a reason to trade before it goes up and makes that move. Right, now, let's go back to the 1 minute, right? And on the 1 minute, you're looking at anything to the left of this. And as you see here, right, once we came down, we got displacement up, and we got an opportunity to trade off it right there. Move up, trade done. Right? Why? Because we swept liquidity and we're trading in a discount. Right? Swept liquidity and we're trading in a discount. And it's before we even trade away and come back to the discount over here. So in this case here, you may not have gotten picked up because it just came to equal lows with this. But in this case right here, you definitely got picked up because you actually traded into the fair value gap. Right? But that's the same, it's the same concept of the silver bullet, right? A break in market structure, a retrace back to a fair value gap. But you don't want to just look for that break in market structure. You want to look for that break in market structure after you've taken out opposing liquidity. The liquidity sweep, then you want to look for that break in market structure and a retrace back. But so many times people just see a break in market structure, right? And then, matter of fact, right here, like, let's come over here. During the silver bullet window, right? You come down, you got a bearish break in market structure right there, right? So now when you trade back up, you're trying to get short off of this fair value gap here, right? You come down, right? You coming down, then you coming up, and now you're trying to short this because why? You came and you took out the low there, right? You came back up, hit that. Oh man, we took out the low again, right? Then when you come back up, now price just going back up, right? So if you came down here, right? If you came here to there and you got short off of this right here, oh yeah, it looked good for a second, right? But guess what it didn't do? It didn't go below that low. It didn't come down here. So now you come down there, it's kissing your target, and then it's come back up and it's taking you out. Now you're stopped out, right? Why? Because you saw a break in market structure and it retraced back, but you ain't realized price wasn't going down. You ain't realized price had changed to bullish. You just saw a break in market structure, so you just trying to short right there. Oh, we're in a premium. We broke structure. We're in a premium. I need to sell. And you don't realize that price has switched to a buy program. We're inside the window. This the silver bullet. Now you're just trading patterns over here, my guy. All right. I don't understand why yesterday opening price market went up and didn't take any liquidity and just went down till morning 9:30. I don't understand why yesterday opening price market, what opening price? Opening price market went up and didn't take out any liquidity and just went down till morning open 9:30. You got to help me out. Thursday opening. My thought is that overnight low took FOMC low from 2 p.m. Then it took that low again during regular trading hours. Thursday at 6 p.m. You talk about today's price? Yeah, Thursday at 6 p.m. is today's price. Like today's trading.
We're not hearing you on Discord.
Oh, I ain't talking. I wasn't talking. Do you hear me now?
Yes.
Okay.
See, I was thinking he was talking about on Wednesday.
Okay, so you say Thursday. So Thursday at 6. What do you say? Thursday opening. Why the opening market went up? What do you mean went? Wednesday. You said Wednesday at 6? Was that the night you were absent? No, I wasn't on here Thursday. Yeah, I wasn't on here Thursday night. So you saying Wednesday at 6 to here? You talking about this price right here? This is Wednesday at 6 to Thursday at 9:30. Right here. Right. This price here, this is Wednesday at 6 to Thursday at 9:30. Yeah, that we talked about this earlier. We talked about this earlier. You must have came in late. We already talked about that. We talked about that earlier. All that right there. We talked about all of that earlier, right? We spoke about all of that earlier. We said that price, when we came up here, this was the time here. Okay. So we said price came here when we opened up, right? We made a high. This was our high on the week right there, right? We came in, we made a high. All right, so price made a high. Okay. Then we came down and price made a low. Price made a low. All right, so we made a high, we made a low. Okay. Then after making that low, we came up, right? Taking out this internal buy side there. Right? We took out the internal buy side, but we did not take out the buy side. So we came up, took out this high, dropped down, swept the low. Right? We pushed back up. We took out the internal buy side, but we did not take out the external buy side. Right? So then we came here, okay, and we dropped down and took out the sell side again. Right? So we dropped down and we took out the sell side again. Now remember, we were saying that based off the higher time frame, right? Based off the higher time frame, what we was looking for at this point was for price to continue down, right? So as we dropped down and took out the sell side, right? We came here, created relative equal lows, right? And then we pushed up and took out the internal buy side, just like we did over here, but left that buy side there, right? Left that buy side there. So we've left that high, right? Swept out the buy side, and then now we're dropping down here. We got these relative equal lows, right? So when we cut down through all of this right here, right? Once we got there, that was an opportunity to sell there, right? Came down here, had other opportunities to sell, whatever, but finally dropped down into the sell side, right? You said, why did it V-shape? Because it wanted, man. I don't know. It's the algorithm, right? It's the algorithm, right? You said at 6 p.m., why did it V-shape? 6 p.m. where? At 6 p.m. where? Why did it just start selling down? At 6 p.m. where? Wednesday open. Ain't nothing sell off here. Nothing sold off here. What sold off there? There's no sell off at any six. This is 6 o'clock every time. There's no sell off at 6 o'clock anywhere. What sell off? What sell off are you looking at? There's no, at the beginning of these yellow tall rectangles, this is 6 o'clock. You know what I'm saying? That's 6 o'clock. That's 6 o'clock. That's 6 o'clock. That's 6 o'clock. There's nothing selling off at any 6 o'clock. Yeah. PM, yeah. 6 o'clock. 6 o'clock PM. 6 o'clock PM. 6 o'clock PM. 6 o'clock PM. It's right here. That's 6 o'clock for Tuesday's open. This is 6 o'clock for Monday, Tuesday, Wednesday, Thursday, Friday. It ain't go up. It ain't go up on no 6 o'clock. Right here. Talk about this move right here. I can't help you on that. You got to understand what's going on with the price. If this move right here threw you off, I can't help you with that. I can't help you with that. What were you expecting here? What were you expecting there? Turn your speakers up. Your audio too. Turn your speakers up. I don't know. I can't. I've been on here a long time. Do you still have the link to join and ask questions on the stage? No. Nah, that was in a different what's the name? Right there. That's Thursday at 6 p.m. Me neither. I'm not sure either. That's Thursday at 6 p.m. Because one minute he said it went down, the next minute he said it went up. Wednesday close, it stopped going down, like you mentioned. Then on Thursday open, it just went up. Talk about here. This is what we talked about the first time, right there. It went up and it didn't take out the high, just like the last time. This move here. Again, that like I say, if that threw you off, there's really nothing that I could offer to unthrow you off, because it based off what was being shown, right? Based off of what was being shown, that was anticipated. That was the daily. other stuff, all the other stuff has been taken off. Let's go back here. All right. Okay. So here, we come here. We inverted that. That's after that, and then we came up, we took that, dropped down. Right. Then so here, right there. All right. Then above this here, we got there. Okay. So now, based off, right, this is right here where we coming into the open. All right, so looking at what price has done, like I say, it's set, right? We set a high and we set a low, right? Once we get our range established, right, you're looking for price to engage with liquidity and show you what it wants to do. So we got our extremes, high and low, right? And now we've come back and taken out internal buy side. So now at this point we have engaged with liquidity, right? So right here at this point we've engaged with liquidity. Once you engage with liquidity, now you're looking for what price wants to do. Does price want to continue or does price want to drop down, right? So looking at before we get here, right? Looking at before we get here, we see that price, right, has come up, right, into a bearish breaker. We hit the bearish breaker, we drop down, right? That's what we created our low off of. We created the high, we create the low, right? When we drop down there, okay, trading up into a bearish breaker. We drop down, right? We take out sell side liquidity there, right? Now we trade back up and we take out this internal buy side, right? So the way price moving in a trending model, you go external to internal, external to internal, external to internal. If price is reversing, right, you go external to external, right? So if you're going external to internal, external to external, right? As showing the possibility of wanting to reverse. Okay. So at this point right here, price is going, right? We're going up, right? We're trending up, right? And when we get here, right, we take out external liquidity, and then we come back down and take out external liquidity. So at this point, right, when we make the high and when we make this low, it's showing a possibility of wanting to reverse, right? So now it's showing a possibility of wanting to reverse, and we're here inside our range where we're showing the possibility of wanting to reverse. So now if it's wanting to reverse, right, you want to see it engage with buy side liquidity and then give you an opportunity to sell, right? So now we have the possibility of wanting to reverse there. We got our high, we got our low, we come back up and we engage with internal buy side liquidity right there. So how does price move in a trend? It goes from external to internal, right? External to internal, external to internal, right? So we've come up, we've taken out internal, left the external, and got a strong rejection off of it, right? So now this is good. This is what you want to see. Now you're just looking for a reason to sell, right? So once we going into this day, right, 6 o'clock, we're going into this day now. The only PD array we got above us is this wick. So consequent encroachment of this wick, right? It's a rejection block, got equal bodies with a long wick, right? Consequent encroachment of that wick, we open up, we trade up into consequent encroachment of the wick. This is designed to keep price down. This is a premium PD array. That's a selling opportunity. If you're in tune with the algorithm, you can look for a reason. You can look to sell there, right? Why? That's just like a fair value gap. You're trading up into a gap, consequent encroachment. This wick is a gap. Trade up into consequent encroachment, right? And then you sell off, right? We hit consequent encroachment. We sell off, right? Taking out the sell side. As we displace down, we create one fair value gap, we create two fair value gaps, and we create an inversion fair value gap. Now, this fair value gap is acting as a breakaway gap. Why? Because we didn't trade back into it and we created another fair value gap. This fair value gap right here created an inversion fair value gap, right? So then once we got over here, after taking out the sell side, right, now we traded back up into the inversion fair value gap, right? Traded back up into this bearish mitigation block and this bearish order block right there, right, at that time. And then I think it went down from there. I'm not sure, right? Nope, it kept going up from there, right? We came up and we traded above the buy side right there. Again, same thing. When we're looking to go down, you want to see it engage with buy side liquidity, right? So we came up, we came down, took out the sell side, right? We're looking for a reason to sell, right? When we come over here into the 9 o'clock hour, we trade up during the 9:30 open. Whatever, we trade up, we take out the buy side, right? And then we come down, and then we go down lower. Right, so you were saying that this move here, not taking out the high and just dropping down, confused you, but not taking out the high was what you wanted to happen, because based off of what we did over here, price showed you that it wanted to go down, right? And since you want it to go down, you want to see it come and engage some sense of buy side. And on the way down here, where's the only buy side that wouldn't invalidate going down? Right here, right? So it came all the way back up to that buy side, right? And then when it dropped down here and took out the sell side, taking out the sell side, it's still in line with wanting to sell. And if you want to sell, you want to see it engage with some form of buy side, right? Where's the only buy side in this run? Up here. What did it? Same thing it did over here. It came all the way back up to the buy side, and then came down back to the sell side. Right? You said, thank you very much. You can turn that. Oh, that's something else. What is it? You saying thank you to? Are you saying thank you to me or thank you to somebody else? I don't know. I'm tired now. So hopefully this hopefully you understand or that helped you. But we did talk about that earlier. So all right, man. All right, that's it, y'all. About to get out of here. Y'all some ride or dies if y'all still in here. You feel me? Y'all are some ride or dies. I done got all the way across the room from the mic. I done got sleepy. All right, wigs do the damage. Wigs do the damage. All right, man. I appreciate y'all for hanging out with me. This was an extremely long one. If you got something out of it, I done did my job. If you didn't get something out of it, I'll do my best next time. Hopefully we can get you to understand something. And gang, Diamond members, we got tape reading Monday morning. 1, 2, 3. This is the 1, 2, 3. Okay, so there's no Q&As. 1, 2, 3. Yeah, no Q&As for the next 2 weeks. Right, no Q&As for the next 2 weeks because there are 1, 2, 3, 4, 5 Sundays in this month. So there's no Q&A this Sunday and then the Sunday after that. Right. So Diamond members, tape reading on Monday morning at 9. Everybody else, I'll see y'all Monday evening for the price action recap. All right. Till the next time, I'm excited to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone. Yeah.